Hello, Oracles. How's everybody doing tonight? Sorry, my computer's run a little bit slow. I think it just did an update, but hope all is well. Definitely a very interesting week this week. But we kind of discussed that in earlier videos about the market kind of being a little cautious about inflation and the inflation numbers. And hey, we got really good inflation numbers that came out this week between PPI and CPI, and we'll jump into that a little bit as a recap for you guys. What's going on, Hanif? And yeah, so we'll go into that. Tesla obviously rebounded with the market, and a lot of people wondering, why did Tesla make the moves that it did? And quite honestly, nothing was Tesla specific. Everything that Tesla did when it came to the moves over the last few days were all the same exact things that the market did. So everything right now is macro driven. Things that we're going to see over the next couple of weeks are probably going to be macro driven as well, except for obviously Tesla's earnings on the 29th. That one there is going to be Tesla specific, of course. But yeah, otherwise it's really going to be macro driven. We got bank earnings that came out this week, very good earnings so far for banks. Looks like positive for the economy. So the economy and the market are feeling strong after that. So between good inflation numbers and the bank earnings, we're looking pretty good for now. Obviously next week we've got Trump's inauguration on Monday, and then most likely on Tuesday morning, he's going to be starting to sign his executive orders. From what it sounds like, he's got at least 100 of them to go already. So the big question is going to be into next week is, what is he going to have for executive orders? How is that going to affect the market? So we'll discuss that in a second once you guys all get on here. What's going on, Sal? Hey, Alex, how are you? Oh, and Alex, I just noticed you sent me an email on or a message on X. I apologize, I have not gotten back to that yet, so I will definitely respond to that. It was from a while ago too. I very rarely see it on there, and X isn't very good about notifying me on those things. So I think I saw it and then just forgot to look into it because I saw it at work. But so I apologize, but I will get back to that, and I appreciate you sending me that information. So looking at next week, the executive orders, that's going to be the big question is what is Trump going to be putting out? Obviously, the big question on everybody's mind when it came to inflation this week was, what's inflation looking like, and how are we kind of basically setting the stage for Trump taking over in these potential tariffs? So now we look like we've got a better, at least, foundation for inflation right now, and headed in a better direction than we had been going into potential tariffs that may spin us in the other direction. And then, of course, the question is going to be at that point, is the tariff stuff that Trump's going to put into place actually going to affect the market? I still think that we might end up getting sort of a sell the news situation. Obviously, post-election, we saw a lot of very particular stocks running in the market, and we may get a sell the news situation on inauguration. And just so you guys know, if I weren't aware, Monday is Martin Luther King Jr. Day, and the market is closed. So we do have a long weekend for the market this weekend. So a lot of times on a Friday before a long weekend, especially with what's going to potentially be going on with Trump on Tuesday and executive orders, just be careful. Obviously we saw extreme fear going into the beginning of this week, pretty much across the board for every statistic you can see when it comes to the fear and greed index. Almost everything was extreme fear. We have since bounced from there and come back up. And actually, let me see where we're at right now. Let's see. Fear and greed index. We are at we're still in fear technically. So we're at a 28 for fear on the fear and greed index, running down. I apologize, I'm not going to pop this up. Looks like most everything is still sort of in extreme fear range category right now. So just be careful, because for me, the way I look at this is we got a nice little rebound the last couple of days, but going into a long weekend before a potential, onslaught of, executive orders that could alter the market one way or another when it comes to the market, the economy, and everything. Market might be a little uncertain tomorrow, might sell off. Truly don't know. Maybe the market's excited and we're going to sell and we're going to just buy into this and we're going to keep on coming out of this extreme fear range. Truly don't know. So just be careful tomorrow in case we do end up seeing a bit of a sell off. At least you'll understand why. Going into a long weekend where the executive orders are dropping Tuesday, yeah, be careful about that. Will Tesla go up during Trump's inauguration or down on January 29th? So that's going to be a big thing too, because it's basically, a little over a week apart between the two of them. So, Trump's inauguration is Monday, executive orders dropping Tuesday morning, and then the following Wednesday after that will be Tesla's earnings. And then, of course, with Elon being so close to Trump and the inauguration supposed to have tons of billionaires there. And a question that I brought up on X yesterday was TikTok. We talk about unemployment and so many issues there when it comes to consumer credit being as bad as it is right now. What if TikTok ends up getting banned and the people who are making money on TikTok no longer have that income coming in? It won't end up hitting the unemployment numbers because they're not technically employed, they're subcontractors. So that won't end up hitting the unemployment numbers. And it's not going to hit really any radar when it comes to unemployment, other than maybe people seeking jobs because they don't have any. But I'm really curious, and I don't know what the number is. If you guys do, let me know. How many people in the US are receiving income from TikTok to a point where they either don't need a job at all or they can work part time at a job, and then the majority of the revenue comes in from no, from TikTok. So I'm really just curious about that, because if that ends up happening, that's a significant amount of revenue. I mean, heck, let's just look at the overall revenue or income dollar amount that TikTokers are making in the US. If that gets banned, what is that amount that we are going to be losing for income in the US from TikTok? So when you're looking at numbers like that, that could affect GDP, that could affect retail numbers, that could affect all sorts of earnings down the road as people lose their jobs. That could affect consumer credit as well. Now, it looks like the Biden administration has passed off that ban responsibility over to the Trump administration. So we'll probably find out about that. And it sounds like Trump is probably going to put a little bit of a delay on that to kind of give some people an opportunity to purchase it. Now, it does sound like the TikTok CEO is going to be at inauguration as well, along with all of these billionaires like Mark Zuckerberg, Elon Musk, Jeff Bezos. So we're going to have all of these billionaires there. Maybe there's going to be discussion. Maybe somebody's going to go and they're going to work something out to purchase it to prevent this ban from going on. So again, that's a question that I've got that's laid out there. I have no doubt they're going to work something out, because otherwise that's going to be a lot of income coming in that people aren't going to be able to bring in. So, uh, yeah, exactly, Lang. Lots of uncertainties next Monday and more fear. And my dad and I have been talking about this, and whether you agree with Trump or not, regardless of whatever your political feelings are, there's going to be some changes that are coming next week. So, good or bad, whether it's going to be good or bad, maybe it's going to affect certain sectors or not. Trump does not want the market to look bad under his watch. So he's going to do everything in his power to make the stock market and the economy look good. Now, Jerome Powell and the Fed have also come out and said that, especially this year in particular, they're going to do whatever they need to do to make sure that the stock market and the economy stay afloat and do well. So if we're getting both the Fed and the presidential administration supporting the stock market this year, that's a good sign. The questions I have is, what is the underlying foundation of all of this? Again, coming to unemployment, which the unemployment numbers did look decent last week. Yes. So we'll see how that kind of transpires going forward. So if that can continue on a foundational basis, that's great. But if they're going to be propping up the stock market on fluff just because they don't want it to look bad, then we could be in for a huge awakening when this ends, or when something actually does break fundamentally. So whether it's going to happen during Trump's administration or whether he's going to float things along until afterwards and then something breaks afterwards, I don't know. So it's just a matter of, let's make sure that the foundation and the fundamentals of the economy are strong, because if that's the case, then we're good to go. If that's not the case, then just be cautious. Yeah, definitely buying the dip. So that's what I did too. I was again talking to my dad about this, and I ended up selling out of my Apple position and my ExxonMobil position, just part of my consolidation phase. I'm not, opposed to either one of the companies. I think both companies are going to be perfectly fine and strong long term. But when I'm looking at my entire portfolio and everything else that I have for stocks, they were underperformers. So I own basically all of the Mag 7, and Apple to me was the one that was kind of a laggard. And again, I think fundamentally the way Tim Cook runs the business when it comes to a stock standpoint, it's fine because they do a lot of buybacks. They increase the dividends. They're very consistent. This is why Warren Buffett purchased it. But their dividend growth has been poorer than everybody else. Obviously, Amazon and Tesla don't pay dividends, but their dividend growth has been poor, around that 4 to 5%, which isn't terrible, but compared to the rest, it's not good. Had them having struggles over in China with what's going on there. iPhone sales haven't been looking all that good. So again, they're still a good company. They're strong. They're obviously the largest market cap in the world. There's nothing wrong with the company, but their growth has slowed down. And considering all the other companies that I own, it didn't fit in the portfolio as a growth company anymore for me, considering all the other positions that I've got. So I dumped that one. ExxonMobil I got rid of as well. I own Occidental, so I'll keep that as my oil play. And I think that's going to do fine. And for them, it was kind of the same thing. I looked at, Occidental, I think, has a lot more upside to go, and they have better dividend growth stats. So I think that Occidental is going to be a much better position for me to have for the oil than ExxonMobil. So I dropped that. Chevron's a great play. I just don't own it. And since I have Occidental, I'll hold that. So I dumped those two, added some more. I got myself back up to 12.5% cash. And then I took that money and I just distributed about the rest of my portfolio. And I did that on the dip that we had over the last week. Of course, buying low, my whole portfolio rebounded very nicely over the last couple of days. And I'm very pleased with the changes that I made. Yeah, speculation that Elon's going to buy TikTok. I mean, after everything he's got going on with X right now, granted, he hasn't been able to push the X video portion of what he wanted as well as he'd like. So bringing TikTok on and maybe kind of assimilating that into X wouldn't be a bad thing for him. But does he have the money to do that? If he does, he's going to have to sell more shares. If he sells more shares, obviously, right now, I still personally think that Tesla stock is a bit speculatively inflated. Right now, it's got a lot of future earnings and potential brought into the stock price at the moment. So Elon selling now, from his perspective, for purchasing TikTok, if that were the case, wouldn't be a bad thing. He'd be selling at a really high point when I thought where I think the stock is. But of course, him selling would bring down the stock price significantly. That would potentially fill that 218 gap. So we shall see. Can TikTokers just move to another platform? It's not that easy, Hanif. Just knowing from a creator standpoint myself, trying to build your following and go to that algorithm on another platform isn't just a matter of shifting over. So let's say you've got 100,000 followers on TikTok, and you've got the algorithm all set going for you, and you've got this snowball rolling for you. Trying to take that and starting over again on another platform isn't as easy. Now, a lot of them do have multiple platforms that they're on, but let's say they're on TikTok, they're on Instagram, they're on Snapchat, whatever it is, and let's say they're making a third, 30% of their income from all three of those. They'll still be losing like a third of their income, and it's not like the other two are going to pick it up at all. It's not as easily worked that way. So, I mean, they could obviously move if they're only on TikTok. They sure could move to another platform, but that means they're going from whatever income they have down to nothing and having to start from scratch. And who knows how long it took them to build that up. And they could tell their followers, hey, I'm jumping over to another platform, come over here. But in a lot of cases, when you do that, you lose at least 50% of your followers on the way over there, depending on how big you are. So that could be an issue. Sal, hey, thought here. Since you value your father's advice, you should put him on the pod once in a while. So I've actually thought about that. He and I have discussed it. I just have to make sure, he's not as tech savvy. So I just have to probably have my sister, because he's on the other side of the country from me. So I just have to make sure he's got a webcam set up and microphone and stuff. But he's already agreed to it. He would love to come on here. So usually he'll be in the comments, if nothing else, to have discussions with us. Tonight he's watching my nephew, so he's not able to jump on right now. But yeah, he's definitely thought about doing that. So he and I will discuss that about getting him on here as well. Because I'd love to have that actual conversation with him on here. Alex, yeah, Realty Income, I do own it. So I started buying into Realty Income. I was newer to the REIT space, and if you guys don't know, REITs are real estate investment trusts. So it's kind of like owning real estate without owning real estate. It's a higher interest or higher yield dividend play. Kind of basically like it's companies who own a lot of different real estate themselves, and you're just getting a dividend off of that. Typically, they don't grow and appreciate a lot in stock price, but they do pay out a nice yield. So a lot of retirees or people who are looking for just income generation when it comes to their stock portfolio, they'll look at REITs, BDCs, MLPs, things like that, or covered call ETFs, which I own as well, like JEPQ, JEPI. So for realty income, there's actually Agree Realty, which is a very similar thing. It's a retail space REIT. So they own the land that like Walgreens is on, Home Depot is on, Lowe's is on, Walmart's are on, things like that. So, and it's a triple net lease, which means that they don't pay any of the fees. Like the tenant pays for all of the expenses. All they do is collect rent from these tenants. Now, Agree Realty and Realty Income, again, are basically the same, but I do like Agree Realty's tenants better. And when I first got into this, Realty Income was just a monthly dividend company. And again, I think they're still great. I think they're a good company. I think you're going to be fine without an issue, but their tenants just aren't as strong. They've got Walgreens, who's been kind of, questionable over the last few years. Dollar Tree, Dollar General, those two have also been kind of questionable when it comes to the dollar store space. So, they're still doing fine, but their tenants aren't as strong as some of the tenants from Agree Realty. So if I could choose over again, I would probably have picked Agree Realty a couple of years ago when I bought into it. But either way, I'm perfectly happy with Realty Income as well. Doing very well for me. When is NVIDIA's earnings day? Let me take a look. I'm not sure when NVIDIA's is. Let's see. Earnings. Nope, no. Did they? I wonder if they haven't announced it yet because it's not popping up here unless it's on. Let's do it this way. Let's see. Go into here. And I will search here. Their earnings is even on here. Nope. All right, let's see if they've got it announced. Upcoming earnings. That's 26th of February. Yeah, so end of February, they've got their earnings. Yeah. Typically, NVIDIA is kind of near the tail end of earnings season. So, like, we'll have bank earnings that you always go first. So, bank earnings have kicked it off. And then we've got then tech earnings come out. So, typically, like, next week is where it kicks off. You'll have like Netflix, Tesla, then then you have the rest of the Mag 7, the Microsofts, Apples, all of those will all come out. And then end of all of this, you end up getting NVIDIA's earnings. Trump should just drop interest rates to a low 2% level to boost the U.S. economy and make him look good, but tariffs will ruin that. Well, here's the problem with that. And this is the concern of the market and the Fed as well, which is why the Fed decided that they were originally going to do 6 rate cuts. Then they dropped it to 4. And then when Trump was talking about all these tariffs, they dropped it to 2, which is why kind of the market was really uncertain over the last month and spooked a little bit just because when you look at historically, tariffs typically lead to inflation, which is why inflation numbers this week were so important. So if we are going to be looking at a potential inflationary environment over the course of the year, you don't want to bring rates down too far because bringing rates down also incites more inflation. So if you had rates at 2% and tariffs coming in, the inflation could run up and get out of control again, thereby causing the Fed to have to raise rates to combat that. So that won't end up happening. So that's going to be the concern, and that's why they won't just drop it down to 2%. So as long as Trump isn't a huge fan of Jerome Powell, but as long as the Fed and the Trump presidency can agree and work together to keep things basically going the way they're going right now, I think we'll be fine. So I think if we get in any situations where, maybe the market isn't doing well, Trump may put a little more pressure on them. But again, you don't want to drop the rates too fast, because the reason we kind of saw inflation almost kind of poking its head back up again over the last few months was because the Fed was cutting rates. So we've now cut 100 basis points from its peak, and we've saw inflation kind of pushing back up a little bit. So that's just kind of the little bit of a concern that we've got there, which is why the Fed, again, keeping rates where they're at right now. A lot of I don't know if it's Goldman Sachs, I think, believes that we're going to be seeing a January cut and a December cut, and or a June cut and a December cut, and that's it. Um, so again, I don't know, and I believe, let me see when the next FOMC meeting is. I think it's the 30th. It's usually the end of January. Let me see, economic calendar. Not this week. No, where is next week? Or don't give me the details that I want. So for the 22nd, I'm gonna guess it's the 20. Actually, ironically, that might actually come out the same day as Tesla's earnings on the 29th. Let me just double check this on the FOMC calendar. 2025. Yeah, 28th and 29th. So yeah, we're going to be getting the next FOMC meeting announcement when it comes to potential rate cuts will be on Tesla's earnings. So that'll be interesting. But again, the market right now is anticipating no rate cut at this meeting. So I think this meeting could be kind of a moot point. I don't think it's going to really move the market much one way or the other. I think earnings are going to do more of that. And I don't think the Fed is going to want to come out and do or say anything that's going to kind of cause the market to, kind of get shook. Because again, this is also going to be a week after Trump comes out with, his executive orders. So who knows how the market's going to react to all of that. So the Fed's going to have to tread lightly going into it. So I don't think the Fed's going to want to do anything that's going, if anything, the Fed may react accordingly, at least with their verbiage, to counter anything that the inauguration and Trump's executive orders are going to cause. So if all of a sudden his executive orders cause the market to freaking panic, then maybe they do something and they speak about, they kind of come out with a dovish sentiment to kind of reignite the market. If it goes the other way and we kind of keep on running up from here, the Fed may be a little more hawkish and kind of try to reel the market back in, because having a market that's wildly out of control makes it even more difficult for the Fed to make decisions. And they don't like to make decisions based upon how the market's moving, but the market moving does affect the economy as well. So they kind of just need to make it just even keel. So whatever happens next week is probably going to be counteracted a little bit by the Fed the following week. Let me see. The optics of Musk buying TikTok, not good. Yeah, I'm not a fan of him buying it. I think having somebody else purchasing it is not a bad thing. I would not like to see Elon do it. I think that's going to be too much for a lot of reasons. Oh yeah, that'd be awesome. So my dad, yeah, when he comes out, he's coming out in March. So when he comes out at that point, I'll look about having him on here. So that'd be awesome. Agreed, Lang. Let's let others. Yes, Alex. Agree Realty. Now they didn't used to, but as of a couple of years ago, they started paying monthly. So again, if you don't have either one of them, here's my toss up with it now. If you don't have either one, Agree Realty has been running significantly more over the last year. A lot of REITs did well in the middle of last year and then have sold off since, just because the Fed cutting rates is usually good for REITs, but the actual mortgage rates haven't come down. They've actually gone up. So, and then on top of that, with the Fed not cutting rates as much this year, or at least the talk about it, the REITs have kind of gotten beaten down. So Agree has actually been outperforming the rest. So the decision is up to you. Realty income right now is kind of beaten down, so it's at a lower point. So, if you think it's going to do well long term, maybe now is a good place to buy. And Agree Realty, been running a little bit more, maybe it still has some room to come down. Again, I'd have to really dive into both of them individually, but I don't think you can go wrong with either one. But again, looking at just tenants alone, I do like the tenants better for Agree Realty. Yeah, Kevin O'Leary was talking about buying TikTok as well. I actually don't even know what the value of TikTok is because Mr. Beast talked about it. Maybe a bunch of these guys are going to get together and they'll all buy it collectively, and they'll create a whole different, like conglomerate company, and they'll all buy it together, and they'll just be like on the board of directors together. Maybe that'll be like a the billionaires little game that they play, and they all own TikTok together. That'll be fun. We'll see. The Federal Reserve is an independent body, and administration shouldn't have any influence on its policies. Agreed. And Jerome Powell has said that, even though he is more left leaning himself, said that they do not take, political stances when it comes to their policy decisions. They go out there and they do what they see in the data, and they make the decision based upon what the economy needs at the time. So that is what they do. So realistically, I don't think, and Trump, and looking at it, Trump is talking about firing Jerome Powell, and illegally he can't. If he wants to really dive deep and find some gray areas and some loopholes, I'm sure he can find some way to do it. But it sounds like he's not going to do that. But I'm sure there's ways he can, talk about it. But realistically, when it comes down to it, and Jerome Powell said it himself, he's like, there's a stark difference between what the Fed does and what Congress does. And if there's policy that needs to get changed from an economic standpoint, that has to go through Congress. They can't do that in the Fed. All the Fed can do is change interest rates. That's it. They change interest rates to make sure that we can have best maximum employment and inflation under control. Those are the two things that they're really focused on doing right now. And they do that by changing interest rates. They don't do policy or anything like that. So if there's anything that's going to require policy, has to go through Congress. So if Trump wants to change any of that, he should go through Congress, as the president should do. So yes, you are correct that the president should never be able to influence, or any administration should never be able to influence the Fed. I agree. So hopefully that doesn't happen, and I don't think it will. But we all know that Trump can have some egotistical moments, and can lead to things like that. Him saying things, but I think Jerome Powell will be strong enough to ignore that, because I think, yeah, as if Trump fires Powell and things go south, it's all on him. Yeah, and I don't think that's going to happen. I think we'll be fine. And Jerome Powell is, he has until, I believe, July of 2026. I know Doge goes until 2026 July. Maybe it's May, but I know it's 2026 is when Jerome Powell's term is up. He says he wants to finish his term out, so I think he's going to end up going to that. So it's sometime in the first half of 2026 that Jerome Powell's term goes to. So sounds like it's probably going to end up working out his term. We'll see how the market does going into that, and then and then we'll go from there. Let's see. Tesla this week. Looks like Cybertrucks, some are getting put on some sales. I was watching Meet Kevin earlier, and he was talking about, at least in his area, some Cybertrucks are getting price reductions a little bit. I don't know realistically what's going on with all of that, but I know that the Model Q, or the Model Y revamp is coming out, the Jupiter. So it's I like it. I do like it. But again, knowing what's going on in the market, in the entire automotive industry, Tesla did have the best-selling vehicle in China. It's awesome. They had the best-selling EV. Actually, it was the best-selling vehicle overall, not just EV, in China. So these are good things for Tesla, but the automotive industry as a whole is going to be very competitive this year. You have to remember, they went through a massive lull when they had a shortage of vehicles. Prices went through the roof. They had pricing power like crazy. They got production ramps back up because of all the supply shortages. Now they have an overabundance of inventory that's out there. Even Tesla did. That's why they thinned out their inventory at the end of last year. The demand, just automotive industry wide, is not there. So it's not really Tesla specific. It's kind of full auto industry wide, because they had so much supply. We're probably going to end up seeing some price wars going on this year when it comes to the entire automotive industry. So seeing as we're going to have price wars going on, that means that Tesla probably won't have the same pricing power as it used to have, maybe a little bit better than it had over the last year, but I still think we're going to have another year of potential issues when it comes to some demand. And again, talking about the Model Q coming out second half of this year, if one of the executive orders is he cuts the EV tax credit, just be aware that that might be a big cause for Tesla to end up selling off. So if Tesla right now is at 415 and next week Trump ends up signing that and gets rid of the EV tax credit, just brace yourselves because Tesla's most likely going to end up selling off after that. Looking at just the dollars, I mean, strictly from a financial standpoint, you're going to have analysts out there who are not retail investors. They're not looking at, any sentiment behind this at all. They're strictly looking at a spreadsheet saying, Tesla has X revenue coming in. They have X number of dollars coming in from EV tax credits. Now we remove those EV tax credits. That's a significant chunk of money that Tesla is going to be losing off of their top line and bottom line. So, and I know that the EV tax credits go to the consumer, but you're going to be seeing those EV tax credits not going to the consumer, and thereby the demand is not going to be there for those sales. That's all going to get worked in strictly from a mathematical standpoint, thereby pulling the stock price down. So just be cautious about that next week when we're starting to look at what Trump is doing. So if EV tax credits get cut, and again, I'm with Elon on this, that Tesla does not need the EV tax credits. I think Tesla's going to be perfectly fine without them. I think in the long term, it's probably even better for Tesla because the other companies that we have here in the US who, are struggling with EVs as it is, are going to be struggling even more when it comes to that because they're not going to have those EV tax credits coming in. So Tesla's profitability on those vehicles isn't going to be as strong. Their pricing power is not going to be as strong, but they're still going to be much stronger than all the other companies who are probably going to end up either floundering or force more mergers like we've been seeing with Honda and Nissan, or you're going to be seeing with VW and Rivian. So between all of that going on, just be aware that yes, it's going to be a good thing for Tesla long term, but it's going to hurt the stock price in the short term. Just be careful with that. EV rebates will stop when Trump gets into office. Canadian EV rebates were put on pause Monday, and we don't know if they will be renewed or not. Yeah, that's true. And with you guys now, who do you have for? I haven't been paying attention. Obviously, we know Trudeau is gone. Who do you guys have for the interim right now? Kind of running the show up there. Just curious. I truly don't know. I can talk to my Canadian friends too, but I've got my Canadian friends on here, so I'll talk to you here. Kevin O'Reilly net worth about 500 million. How in the hell is it coming? Yeah, okay. And thank you for 40 billion. I was wondering how much TikTok was. I had a feeling it was going to be significantly more than that. And the only one who has the money is Elon Musk or Jeff Bezos. Could potentially do it as well. We know that Jeff Bezos has been selling a lot of his Amazon stock for we don't know if he's buying a sports team or maybe it's for Blue Origin, who just had a successful orbital launch, which is awesome. It's the first one they've had. Usually they had suborbitals until now. So Jeff Bezos could as well. Seems like Elon and Jeff Bezos are getting along relatively well. So maybe it's going to be a joint venture. We'll see what happens there. And again, if Elon's going to be a partial owner of this, maybe like a 10% in there, fine, no big deal. But again, when you have that many billionaires jumping on board, that's a lot of egos in one place. And usually when you have that, you end up turning into something like the government and then nothing gets done. So I don't know how it's going to play out, but I do have a feeling that Trump is not going to ban it, and he's probably going to put an extension on that so as to give some people an opportunity to come up with a deal to purchase it to keep it running here. I have to look at my sock drawer to see if I have any money to buy. Yeah. I've got my piggy bank. I'll crack open my piggy bank and we'll pull that spare change out and we'll all go buy it together. That's what we'll do. Maybe the Tesla retail community will all chip in and we'll all go out there and buy TikTok collectively. That'd be great. Let me see. Trudeau's there until the Liberal Party gets a new leader. Oh, okay. So he's stepping down, but he's still acting. Okay, got it. We will have an election to find out, but Trudeau is there for now. Got it. Okay, that makes sense. Many TikTok users already switching to Red Note. And see, I don't even know what Red Note is. Look at my dad knowing more than me about this. That's awesome. Yeah, so apparently they're already switching over to Red Note, and if that's where how it goes, then so be it. Again, it's wise of them to do that because they can have both platforms still. So just in case TikTok is saved, they've got their TikTok platform. If not, they've got their backup plan. So good on them. And that's the other thing too is, and I was talking to somebody else about that, which is I really wish, and this is one of the reasons why I do a lot of the financial coaching that I do, is, I did really well with Beachbody in the beginning. And I kind of didn't know what to do with that extra money coming in. So I used a lot of it to pay off my debts, which was good. But then other stuff kind of spent frivolously because I didn't know where else to put my money. And then, I look at what I did with YouTube in the first year. I did extremely well. I'm not, doing as well now, but I'm enjoying it more now. I'm not burned out as much. So for me, I look at people like this in TikTok and I'm like, I hope they were wise with their money. I hope these people on TikTok didn't just go out there and just, buy lavish things on credit, thinking that this is going to be, a huge spiral and this is just the beginning for them and this is the tip of the iceberg. And, they're going to work their way into it. They'll build up their audience and they'll have millions of dollars coming in to purchase these things in the future because you never know when something like this is going to happen. So I would have no doubt there's many of them who don't have a backup plan, a safety net. They didn't take a lot of the money that they made and invest it. So that's one of my concerns with this. So hopefully, yes, the backup plan is going well for them, and we'll see. Let me see. Redno, a Chinese control platform with more radical Chinese views. Oh, so if TikTok is going to get banned, then I would imagine Rednote's going to be just as bad because TikTok is getting banned because of the algorithms and how China is kind of controlling the algorithms, and we don't like that. So Rednote would be way worse. So yeah, okay, yep, you guys are already talking about it. Yeah. So you guys are talking about ByteDance is the owner of TikTok. ByteDance is the mother company, just like Alphabet is the like the technical mother company of Google. Um, ByteDance is the mother company of TikTok. Let me see. What's my dad think of ACHR Archer Aviation? I don't know. Dad, you can take a look at that one yourself if you want to give us some feedback on that. I know chart wise it's coming up. Like I know EOSE is another one that a lot of Tesla community members are running into. To me, it's my investment thesis has changed. I'm not really into a lot of those non-profitable companies yet. I like the more mature companies. I like companies that yes, thank you. Hit the like button. I appreciate that. I'm into more of the mature companies. My dad we worked together on this, and he kind of encouraged me to go to the stronger, more well-developed companies. And again, I have no problems with that. Like I had SoFi before it was profitable. I had Palantir before it was profitable. And obviously they've done well and they've come there. And there's some companies you can see that are making their way and they're making strides towards profitability. But still knowing that the economy is kind of in this uncertain point right now, companies that are not profitable are going to get hit the hardest if we get into a recession. And right now, I'm kind of building up my portfolio to a place where I have a lot of downside risk mitigation just in case. Because the reason Warren Buffett has made the wealth that he has had is because he's very patient, waited for opportunities. Sometimes he had to wait 5-6 years for those opportunities to come along, and then had this massive amount of wealth built up, took advantage of those opportunities, and then just waited again till the next opportunity. Right now, I think we're getting little opportunities here and there. And obviously, nobody knows where the market's going to go from here. But you can definitely tell when you have a massive correction. Those are the times where you really want to back up the truck. Right now, we've had some little kind of, 7% pullbacks, little tiny things, nothing major. I mean, like a 10% on the Russell, but nothing that is like, oh, this is definitely a massive buying opportunity. The economy's in the pooper right now. Let's go out there and back up the truck like we saw a great financial crisis, dot-com bubble popping, things like that. We haven't had one of those since 2022. 2022 would have been one of those opportunities. So for me, I'm still going to keep investing my money as I get it, but I'm still going to make sure I have a good chunk of cash on the sidelines, and I'm going to make sure that I have a lot of free cash flow coming in, waiting for those opportunities. So I keep on buying little bits, keeping all that on the side, and then waiting for that big opportunity to come along. Quantum computing. My dad and I were just talking about this yesterday. So, you had, NVIDIA coming out talking about how Jensen came out and said, quantum computing is years away. We're not even close. You've got Google, who's got their quantum computing chip. You've got Microsoft coming out talking about quantum computing the other day and kind of reignited that excitement from the market. But Microsoft doesn't really have anything yet. They're talking about it. They're doing a lot of research on it, and they're thinking this year is going to be it. But do they actually have it? To me, them talking about it sounded a little bit like Tesla talking about FSD. We're working on it. We're almost there. We got this stuff, but they don't have it yet. So I think quantum computing is going to be the future. It's going to be very much like AI. We're getting to that point, but we're not there yet. So I just don't know when we're going to get there. So that's just the question on everybody's mind, just with everything else, is when are we going to get there? Like Tesla and FSD, we're going to get there. I have no doubt we are. It's just a matter of when. And so for me, that's where it comes down to why I made the video I did for the other day about bulls versus perma bulls, where bulls are looking at 12 months. They don't see like feasible bottom line affected numbers coming in from FSD or cybercabs. Obviously, cybercabs aren't even until 2027. Even if it's going to be like a customer, individual owned robo taxi, realistically, in the next 12 months, we're not going to see revenue coming in that's going to impact the bottom line from this at all. Even if they solve FSD tomorrow, by the end of the year, maybe you're going to see some revenue coming in from this, but that's it. I think we have a better opportunity of seeing a larger impact from the Model Q this year than we do from FSD. So same thing with quantum computing is I think we're not going to see any real viable revenue coming in from this probably until 2026, 2027. Oh, thank you, honey. I appreciate it. You guys talking about smashing that like button. You guys are awesome. Yeah, sharing ideas. I love when you guys share ideas. Like these conversations, this is my favorite part of the week for me. Like I love putting out the videos. I'll give you guys my thoughts, but I am more interested in your thoughts on all of this. Um, and as my dad says with ACHR, some promise in ACHR, but I only deal with top-rated companies in the sectors. Yeah, I mean, and my dad's got me onto that as well, and I've been a lot more successful with that. And for two reasons. One, again, I have nothing wrong with these companies. I think people do very well with them. But for me, just as far as my own stress level, what I'm doing with my job and having to focus on these companies, something more even keel was more my pace. So keeping with the better companies, not having to worry about, hey, is it falling because there's an issue with the company, or is it falling just because the market's falling? Is it going to rebound? I don't know. Those companies like an ACHR, I think it has potential, but if we get a massive market pullback, is it going to recover? I don't know. I don't have the faith enough in that company to know that's going to do this. Companies that I own, Microsoft, Visa, American Express, MasterCard, JP Morgan, these companies, I know they're going to be perfectly fine. No issues whatsoever. My only issue with some of the credit card companies is the consumer debt. But even so, we've seen this in the past. They still do very well. So honestly, I like those companies that are, top in the sector because I know full well I don't have to panic about any, massive pullbacks on these, and I'm not swing trading them. I'm playing them long term. So that's just my thoughts on that as well. So again, I think ACHR could be very much like an EOSE, could be like a SoFi. I'm just not playing that game anymore. Here's what I think about quantum. They crashed last week. Now they are cheaper than a couple weeks ago. So the best thing to do is buy a small portion and keep DCA. Yeah. I mean, and the thing with quantum computing is look at what companies you're buying into. Because I can look back at some of the marijuana stocks from a few years ago, or, look at these sectors that did very well and then all of a sudden they fell off the radar. This could be another one of those as well. This could be one where these companies do very well and you have some winners in there, but then all of a sudden the sentiment, this is a very strong sentiment driven sector right now, and an idea with the quantum computing. So, to Lion's point, it sold off yesterday and sold the last week or so. could be a good buying opportunity. Maybe you buy it now in dollar cost average, but I think you're going to be getting a lot of these swings before you actually get to that point. So make sure you're doing your research on the companies that are involved in these, because again, those companies could be getting bought out by a larger company. Not a bad thing, if they buy it at a good price, maybe you make a nice little profit on it. Or, these companies, make sure that their profitability is good, because again, what are they bringing in for actual revenue right now? Because we haven't gotten to that point where we see the true revenue coming in from it yet. And then, hey, are we going to get a recession? Are we going to get a bigger economic problem? Are they going to be able to survive that? So just some factors to go into all of those. So a smaller DCA, not a bad idea. Catch these downswings. If we run back up again, that's where you use your patience and say, all right, we're now on an upward momentum swing. I bought low. I'm going to hold. If you feel like maybe you want to take profits, take those profits as it goes up, or you just hold and wait for that next pullback, because inevitably it is going to pull back. But that's not a bad strategy, is to just pay attention to those things. Yeah, exactly. Jensen said it's years out. Then I think they set up a quantum computing day, didn't they? That's actually, I wouldn't doubt it. And again, this is one of those things where Tesla has done this themselves, as well as battery days. All these different days that Tesla did. These companies having these kind of getting people's attention drawn to it, to say this is what's coming down the road. This is what we got going on. This is our viewpoint on it. This is what we are working on. So this is going to be the future. But when is the future? I don't know. So if it's a couple years out for Nvidia, they can certainly do a day and say, hey, our plan in the next 5 years is to come out with this quantum computing stuff. It's not a bad idea for them to do that. These are some of the, if you guys are curious, some of the quantum computing stocks that are out there. I'm not familiar with them myself, but Lion knows. So if you guys want to just take those down, feel free to take them down and do your own research on those to take a look at them. Sal, I'm thinking of getting 10,000 worth of shares. Your son sold me on theory of gaps potential. Oh, okay. Talking about ACHR. Good. There's a gap around $6, waiting for that to fill. Cool. I'm glad you're learning. I appreciate that, Sal. Yeah. Hopefully some of the education I give you guys helps you learn some of these things and goes out there to do that. Because that's what I try to do. Is I don't want to tell you guys what you should or shouldn't do. I want to educate you on being able to do it on your own, and you're doing that. I love that, Sal. Thank you. Great companies, but you need to play them right. Yeah, that's it. Just play them right. That's a good. So selling covered calls on high growth companies. So obviously, options, you're going to make more money on anything that's highly volatile, which is why Tesla is one of the top ones out there for options traders. And quite honestly, my dad doing very well with swing trading. I think the last year has been great with it. Obviously, in an upward market, you really can't go wrong. But even in a sideways market, or anytime there's volatility, could be very good. Or you could play the wheel strategy. And the wheel strategy is where you sell a cash secured put on a company, and then you just keep on doing that to collect the premium. And you want to make sure you do this in a company that you want to own 100 shares of anyway, or whatever you're doing, because each option is going to be 100 shares, each contract. So you go out there and you do a cash secured put. Once that cash secured put triggers, you then do a covered call, sell a covered call at the exact same price for that on the other side around, for that 100 shares that you just picked up, or whatever the contract was that you wanted. And so you just keep on recycling back and forth between covered calls and cash secured puts, and you just cycle those around. And obviously you don't need to use a set cash secured put if you've got the shares, but either way, you keep on doing that wheel strategy and cycling around, and you can keep on making the premium both sides, especially when we have a market that could be as volatile as it's starting to get up to be. The last year or two wasn't really all that volatile, but we're starting to get back to that point. Look at the volume when you buy a stock. The less volume it trades, the more volatility it will have. If you were looking at those types of stocks, buy when the volume goes up. Yeah, that is one of the things that my dad taught me, especially when Tesla was still a younger company, is when the stock price goes up significantly and there's high volume, that means that big money bought in. When you are looking at a company that, if the stock price goes up significantly, but there's low volume, that just means that there was low volume. So it's a lot easier to manipulate the stock one way or the other. So Tesla's not, it's still like that now, but the smaller the company is, the less shares they have, the lower the market cap, the easier it is for somebody to manipulate that stock price up and down. So really pay attention to the volume on those days. So if you see a red day with a lot of volume, that means that a lot of money dumped out of it. Find out why. Why did a lot of money dump out of this? But if it's a lower volume trading day and the stock is down, hey, maybe it's a good buying opportunity at that point because it's just down because somebody decided to push it down for whatever reason. So yes, so on those smaller companies like that, definitely pay attention to volume when you're doing that. Yep, exactly, Lion. Yep, when you were DCA buy on the red days. It's literally one of the easiest things. Like people are like, "Oh, how do you buy low and sell high?" Well, it's obviously not an exact science, but red means that it's lower than it was yesterday. So that's low. You sell high. Sell on green days if you're going to be selling. So really, kind of very basic right there. Da, da, da. Oh, nice line. You've been in the market since 2007, so you were right there starting at the financial crisis. I mean, honestly, starting at the bottom, that's fortunes are born during bear markets. So you catch in 2007, right before it really bombed in 2008, give you a lot of learning experience. So you've been through that before. So for me, mine would be the COVID crash in 2022. So not the same as 2008, but similar, a very big crash and then a big bear market for an entire year. We obviously had a significantly better recovery than the financial crisis, at least a faster recovery. It took a few years to come out of the great financial crisis, but I love your insights, so I appreciate that. Anyone buying Truth Social on Monday? Oh man, well Monday you can't because Monday the market's closed. So if you wanted to buy Truth Social to see what's going on, maybe tomorrow buy it. But yeah, I I'm not playing that game. Absolutely not. Yeah, don't overstay your welcome. It was my dad has always taught me no profit's a bad profit. So I would much rather sell out of a company or take some profits and miss some upside than have a stock crash entirely and lose money. Now, obviously, you don't lose money until you sell. So if you have confidence that whatever company you have purchased is going to rebound and come back up, great. But don't let hopium think that it's going to come back up. Don't say, hey, I hope this is going to come back up, or I think that it's going to come up because the sentiment is still strong. Always buy on financials of the company. Buy on the fundamentals because the financials are what are going to help it recover. The sentiment may help it recover, it may not. But if you've got strong financials, then you can almost guarantee yourself that it is going to recover. And then you don't have to worry about sentiment. Yeah, 2007 was a hard one. I can only imagine. I was actually working at Home Depot at the time, so with the entire housing market crashing, we felt it hard. Hiring freezes going on, lots of jobs getting cut, shifting people around. So just from a working perspective in that industry was brutal. So from an investing standpoint, man, that must have been real rough. Laying in the market since 2021, less experience among all ya. Yeah, I mean, realistically, I've been investing since really paying attention since 2019. And actually, I just did. Oh man, I just did a compound annual growth rate because I was looking back at my notes as I started really tracking my net worth at the beginning of 2021. It's literally January 1st, 2021. I have the amount that I had there, and I still had a good chunk of debt that I had to pay off. Had my 401k was just starting to grow. I had like $5,000 in my investing portfolio. And over the last 4 years, I have a compound annual growth of my net worth of 150%. So it just goes to show that paying off your debt, keeping your finances in check, and investing your money are going to make a huge difference. Because you figure 2021, that was still going through that 2022 crash where I made a lot of mistakes. I wasn't really good with the whole, buying things. 2022, I was basically buying mostly Tesla on the way down. I was buying that in dollar cost averaging, bringing my cost basis down on Tesla. That was most of my investing of 2022. I was putting money aside to purchase a house. Those were the two real big things that I did in 2022. And because of that, and then I took that opportunity as Tesla came back up, took those profits, switched it in the portfolio I have now, bought a house. All of that investing, 150% compound annual growth over 4 years. My portfolio itself was actually, let me see. I took notes of it. Just the portfolio. Oh, where is it? 111, almost 112% compound annual growth. Now, that does include the money that I put into it myself. So obviously, I had to infuse cash of my own to go into it. Um, but still, that I mean, I still grew on my own as well between everything I put the money into. So yeah, so the portfolio itself between that and that does include the house and what I have there. But man, as my dad puts it here, the more emotion you could take out of trading, the more successful you will do. And I learned a lot of that over the last 3 years is removing my emotion and putting it into more secure companies that I feel comfortable with, putting it into boring. Boring is the most safe place you can be. If it's boring to invest to you, you're probably going to do very well. And to me, I've switched it to a much more boring strategy. And I have to do things to make it more exciting for myself, like make all my spreadsheets and talk to you guys and do things like that. That makes it more exciting for me. But because it's that boring, my stock portfolio has done extremely well. So I agree with that. I had to trim Palantir significantly when it was at 80. Yeah, I did the same thing. It was honestly difficult, but I became too attached to shares. Yeah, it's don't grab on, don't get emotionally attached to things. Tesla, I was doing the same thing. And again, I love the company. I think they're going to do very well, but I put that money into better places and made more money with it. And now I have cash flow coming in. And Palantir, man, my cost basis on Palantir is $20. And I sold a little bit in the mid 60s and low 70s. And my portfolio now is telling me to add based upon my strategy. I do not want to add still. I still think Palantir is extremely overpriced. And they have so much perfection future growth built into the stock price right now. I'm not a buyer. I'm not going to sell any more shares. I'll leave it where it's at and I'll hold what I have. But man, that ran so much. SoFi, I trimmed a little bit of SoFi. When it pulled back to the 13 and change, I bought a little bit more, added some there, but I'm really not, adding any more. So I'm being very cautious with that, and following my oh, sorry, following my whole strategy. I'm not really much on the selling side of things. There's a few companies that'll sell. I'm trying to consolidate, so I'll sell out of positions entirely to consolidate. And I'm not really looking to trim, but if my growth companies, and I have 4 growth companies, I've got Tesla, Amazon, Palantir, and SoFi. That's it. And I have my cryptocurrency, which I trimmed some Doge when it ran up significantly higher. I trimmed some, did I sell Bitcoin? No, I trimmed, SHIB a little bit. And I've since added back to SHIB as it dipped back down. But that's it. Those companies there, I may trim a little bit if it completely runs wild, because that's what those are designed for me, is to trim as they go up and add that cash to other positions. And as my entire portfolio grows, I'll add back into those. But I think that those companies there swing a lot, and there's always going to be more buying opportunities going forward, Tesla included. So I just try to just follow the money and don't really get myself emotionally attached. Yeah. Always pay yourself, take profit. And that's like Coney. I've sold out enough of Coney right now, and I've made enough money on that where I'm playing with house money. It doesn't matter. I can lose 100% of my investment in that, and I've still made money on it. So that's one of the great things that a lot of people will do, especially in some high growth companies, is if you've doubled your money, there's no shame in taking out what you've put in. Play with the casino's money. At that point, there, even if you lose everything, you haven't lost everything, because you took out the money that you put in. You're playing with somebody else's money, so any profits from there are 100% gains, 100% profits. So, you bought Tesla in 2019, yeah, honey. If you got in at a great time. Now, honestly, we can look out 10 years from now and can say this was a great time as well. But 2019, solid time to buy. That was well played there. I have covered calls on Palantir to justify holding at a current. Yeah, I mean, that's another one. Covered calls on Palantir is not a bad option at all. Literally bad option. Pun intended. You should take profit when at almost all-time highs. Yeah. The amount of companies at all-time highs. That's why for me, usually when I'm buying things, other than, looking at what my portfolio is telling me, if I need to prioritize, I'm like, well, what companies do I own at 52-week lows? Because, obviously looking at the company, make sure the financials are strong. Why are they at 52-week lows? If they're just 52-week lows because maybe the sector's not doing well or just out of favor at the moment, those are the ones I want to buy. That's when I buy. Buying low, 52-week low. Buying low is precisely just that. Um, so that's why I take a look at that. Selling high, 52-week high. Well, do you think that it's overvalued? That's where it comes down to figuring out how to value a company, learning how to do valuation models. Then you can learn, well, is the 52-week high just a stepping stone and we're still going to continue to go higher? Or is it a point where maybe the value is a little bit stretched right now and I want to take some profits? Just learning those couple of very simple things just make you can really simplify trading. So investing is not simple, but there's a lot of little things you can do to educate yourself to make it more simple. Just like learning a new language, it's no different. You can kind of make out some broken words here and there, but over time you learn more things, and the more you learn, the easier it's going to be to understand that language. The problem most new traders do, they don't take profit and they keep hoping it is going to go up higher. One of the things I learned at Home Depot from my district manager is hope is not a strategy. So if your strategy is hoping something does something, it's not a strategy. It's a terrible option. You are gambling and you are not investing. So that's your tough love for the day. So just make sure if you ever tell yourself that I hope this does one thing or another, don't. You're not investing. Yep. Then the stock market tanks and they get crashed. That's exactly what happens. That's exactly why hedge funds do so well, because they can manipulate investors who are like that. They know how new investors are, they know how uneducated they are, they know how they gamble, and they know how they invest with emotions. They know how to manipulate those emotions. They do it intentionally to take all of your money. Thank you. Yep. Not married to a stock. If they run high, book profit. That's it. Especially if you're gonna be a swing trader. And for me, I'm not a swing trader, but I have learned in this because my dad does it more short-term swing trading strategy. For me, I'm not much of a swing trader, but I'll hold things for a longer period of time. And if I see something is running and say, hey, you know what, it's running a little bit higher, I'll take some profits. Or I say, hey, maybe I want to consolidate that position. I don't want to hold it anymore. I think it's run a bit higher. I'll sell out of it right now. Maybe I've had it for a year, year and a half. I'll take long-term gains on it. I'll sell that out. And then I'll wait. Maybe it comes back down later on and I can go back into it later. So just paying attention to how things swing like that. For me, I just do the swing trading on a more long-term basis versus my dad is more of a shorter term. Yep, new traders make those mistakes, don't know when to sell. Yep, they don't know when to sell, and they'll fall into the trap of FOMO, where they'll buy when everyone else is buying. No. Important things that I learned from Warren Buffett: buy when others are fearful and be fearful when others are greedy. So when people are being greedy, that's why I look at the fear and greed index. Everything was extreme fear. Guess when I bought? Monday and Tuesday. Guess what happened? We rebounded. So I bought when everything was down. Now, granted, I have no idea. Maybe we fall back down tomorrow, and then you look at it on a longer spectrum scale. Maybe we're kind of on a downward trend right now on the long term. Don't know that. But as of right now, I bought when things were in extreme fear, and I'm very happy with my decision. And even right now, even if we rebound and come back down, next time we pull back down even further, I'll have more money and I'll add as we keep on dipping down. Now, people say, well, you're catching the falling knife, but dollar cost averaging over the long term is proven to be one of the best ways to garner long-term wealth. Theoretically, dollar cost averaging over the long term is catching the falling knife when the knife is falling. But if you do it for a long enough time, that knife ends up coming back up, and then you end up buying on the way back up as well. So obviously that it's going to matter, what companies you're buying into, because you want to make sure those companies are companies that are going to come back up, which is why I have chosen some of the best companies out there. But that's kind of how it works is, dollar cost averaging, and you just do it slowly over time. And for me, if you're actually paying attention to the market, you know how to value companies, you're not just dollar cost averaging all the time blindly. You're saying, hey, I'm dollar cost averaging at more opportune times. It's kind of where my strategy comes in for my portfolio is when I see areas and companies that are underperforming the rest, those are more opportune times for me to buy into those in particularly. Yep, exactly. I DCA more or double when all my good stocks tanking lots. Yep. When everybody else is crying in a river of red, you're like, yep, that's my time to dive in and buy some more. Oh man, tonight's been awesome, guys, but it's been over an hour and I lost track of time. And I do need to get to bed because I still have to work tomorrow and get up early. But man, it has been awesome tonight with you guys. Awesome as always. Love hanging out with all of you guys. Again, I should be back on schedule every Thursday night. Shouldn't be an issue. If something comes up, I'll let you know. But otherwise, thank you guys so much. Awesome as always. Love hanging out with you guys. Have yourselves a great weekend, and we'll see what happens on Tuesday when Trump comes out with these executive orders. Have a great one, guys.